Hello, dividend growth stock investors. It is Colby, the DGI Crab, and I have an announcement to make. I am now a Walmart shareholder. If you're new to the channel, you'll know that this channel is all about dividend growth stock investing, and I cover just 60 dividend growth stocks that I've put in order of different tiers based upon your age. Now, Walmart is not one of those 60 stocks. However, I do have a referral link in the description below to the SoFi platform. If anyone clicks on that link and signs up for SoFi and funds their account, you'll get some bonus money. And I will as well for the referral. Now, I don't do this for the money, so I thought it would be fun if I put that link down there. If somebody signed up for SoFi, all you have to do is just email me, dgicrab@yahoo.com, and I will use my bonus on anything that you tell me to, and I will hold it forever. The only two stipulations that I have are it has to be something that pays a dividend, and I don't want it to be one of the 8 ETFs that are part of the Great ETF Race series. So I just got another referral a little while back. The money came through at the end of the week, and I am now a Walmart shareholder. This came in from Joel, who said he did not want to steer me wrong. Just said buy Walmart, it should be part of your tiers, so you better have some. Well, it's not part of my tiers, but I am now a Walmart shareholder. So let's take a quick look here at the breakdown here. So I've got it here on SoFi. It's ticked down just a little bit, but as you can see here, I added $75, which was the referral bonus to Walmart. I've got just shy of a full share. So hopefully with a little bit of dividend reinvestment, we'll get that up to a full share of Walmart stock. So you might ask, why is Walmart not part of my 60 individual dividend growth stocks? It's a super blue chip company. It is a dividend king with 50 plus years of consecutive dividend growth. The problem with Walmart is the growth rate. You'll see here it's a low yielding stock. It's yielding just a shade above 1%. And this 5-year growth rate, not quite 3%. So while the share price of Walmart over the years has done an excellent job of continuing to go up, they did a stock split recently. The dividend growth on it just has not been enough combined with the starting yield. So if we look here at the dividend growth rate here on Seeking Alpha, we can see here that since 2014, Walmart's dividend growth has been very, very poor indeed. 2% on average, maybe not even quite 2%. Now it is very consistent in that regard, but you also can see here that it's just not a super high yielder to begin with, not a super high growth on the dividend either. Now if we go back prior to that, Walmart would have been considered one of the very best dividend growth stocks. You see here lots of years of double-digit dividend growth. This was a really nice stock to have if you were a dividend growth stock investor years ago, but they've stopped aggressively growing that dividend. Honestly, I think that a lot of it has to do with they've put a lot of money into their online shopping presence. They are competing with Amazon and not to mention just your other big box stores like your Targets, or on the grocery side, Kroger. They've also done a lot of reshoring of their supply chain away from China to India in the last few years. All of that stuff combined takes a fair amount of money. So they're just not prioritizing growing that dividend. They're putting money back into the company so they can continue to remain an absolute powerhouse of a company and of a stock and meeting the challenges of today's environment. So I'm certainly not opposed to owning it. It's an excellent stock. Obviously, you're going to get a lot of share price appreciation, but to me, this one is now it's not a tech stock, but because of their online presence that they're putting a lot of money into, as I said, look at this, up 51% in the last year. It just has a lot more characteristics now of a tech stock as opposed to a consumer staple or a chain in that way. Over the 5 years, they're up just about 100%. 10-year 224.2. So certainly one that I expect to do a lot of share price growth over the years, but not one that I'm going to be counting on when it comes to supplying me with dividend income, a growing source of dividend income that I can utilize in retirement. So again, the sad growth rate and the low starting yield is why it's not in the tiers. I've certainly got a fair amount of Walmart exposure just because of my position in the S&P 500, which Walmart's certainly a big part of that. But hey, now I've got just shy of a share. Happy to own it. And again, click on that link in the description below if you haven't signed up for SoFi yet. I certainly like the platform. It's the platform that I utilize for the great ETF race, the every other Tuesday series here on the channel. And as I said, you fund your account, you get some free money, and you can send me an email, dgicrab@yahoo.com. Let me know what you'd like me to invest in. As a result of this offer, I'm a Walmart shareholder. Maybe there's some other stocks that aren't in the top 60 that this channel covers that you think that I'm mistaken on, that I should have as part of my portfolio. So this is a great way to do that and get a little bit of extra money for yourself as well, and try out a different investing platform that you might end up really liking. I definitely have been enjoying SoFi quite a bit. I think that you will too. All right, everyone, that's it for today. I will see you on the next video.